Alright guys, so quick follow-up to my previous videos. I wanted to combine what we said before about the mortgage versus renting, and then the used car or the older car versus the car note. So in this video, we're combining the two. We're combining the two to see how much we would save, or what would be our return, net return, versus combining both the mortgage and the used car, right? Versus renting and having a car note. So these numbers right here, which are the potential savings from the mortgage and the used car. So let's get into it. So you have the monthly mortgage payment right here, which is $640, which consists of the mortgage principal and the mortgage interest. So as I explained in the last video, the $260.84, the principal, is you exchanging $260 for $260 worth of the property, and the mortgage interest will just be the fee, the bank fee, for them providing you with the loan. So the interest is going directly to the bank, but the principal is coming back to you, but in property. So you can't, although you can't spend the money anymore because it's tied up in the property. You can't spend it because it's tied up in the property. So even though you got rid of the dollars, you made the payment, you got a piece of the property in return. And so also keep in mind that these numbers are showing, this is focusing on just the very first payment of the loan. So you can see right here, I can't make it big, but it's kind of tiny, but you can see the first payment would consist of $380 for the interest, and then $260.84 of the principal, right? So then we move on to the monthly insurance. The monthly insurance would be $60. That's what we averaged it at, $60 monthly insurance in South Florida for a 2-2 condo. As we mentioned in the last video, this is all for a 2-2 condo. And then the PMI insurance will be $30. The monthly property taxes around $175, and the monthly repair and maintenance, which was the 1% of the value, which was the $160,000. The value of the condo times 1% was $1,600, divided by the 12 months, which would be $133. And the HOA would be around $400. That's what typically they'll be around. 2-2 condo here would be around $400, which give you a total monthly payment $1,438. Keep in mind though, the monthly payment for everything will be less, but we're budgeting for the repair and maintenance, so that's why it's $1,438. Now over here we have the rent. So the rent just has one payment, which is $1,700. We said for 2-2 condo in South Florida be around $1,700. That's about the lowest you're gonna get. So the amount of money that you save with the mortgage would be around $261. So with combining these two, the principal that you paid for exchange to have equity in the property, and then it's with the cash savings, that would be a net return of around $520, right? So that's for the mortgage versus renting. And then down here we have the used car or the older car versus the car note. So in this scenario, we said that if you wanted to, let's say you were looking at a used car that was around $5,000, right? And keep in mind, this is not a standard amount. It could be lower. You know, I bought a car way less than this, but I just wanted to, increase the price a little bit, because I know, some people may not want to get, a car that may be too old, or, stuff like that. So we kept the car price at around $5,000. Down payment was nothing because we said that we were going to buy the used car with a personal loan, and that personal loan would have an interest rate of 10%, and the payback period would be around 5 years. And with these terms, the monthly loan payment would be $106.24. Then we said the car insurance would be around $150. This is not full coverage insurance, but it will be a pretty decent coverage. And so the monthly car payment would be around $256.24. And then the car note, we said, would be, if you are buying a newer car, we said that we compared the newer car to be $20,000. Down payment, we said nothing. You walking away with putting nothing down. The interest rate, we said at 3.5%, and the payback period for the car note was 6 years. So with those terms, the monthly loan payment, car note payment would be $308.37. And the car insurance, these companies are gonna 9 times out of 10 require you to get the full coverage insurance, which here would be, as would estimate on average, would be around like $250. So we said that total would be $558. And so the savings for that, for getting the used car versus the car note, would be around $302. And so adding all of these up, the 260 versus 261 and the 302, we got $824. So this is the monthly amount that you could potentially save if you combine having the mortgage, right, and the used car, buying the used car, the older car, versus renting and having a car note. So we were just comparing those two scenarios. That's not to say one is better than the other, but it's just to show what could potentially happen in, if you decided to go one route versus the other. I lean more towards the mortgage versus used car because this is personally what I did, and it worked out. I don't know the exact numbers, of course, but it worked out pretty well in my favor. I didn't have any car issues. Most people are afraid to buy older cars because of car issues. I really didn't have no car issues like that. Very like minor things, nothing big, no like engine and transmission problems, nothing like that. Of course, you want to vet the car. If you do decide to go the older car, get an older car, get a used car, you have to vet the car. We mentioned a couple of things in the last video as far as having a clean title, low mileage, and the type of car you get, like a Toyota, those kind of things. And you want to have someone with you that knows about cars, that can vet the car, stuff like that. But I didn't have any issues. I still ride an older car, and I don't have any issues. I had 2 older cars, and I really don't have no issues with them like that, really. And the amount of money that I saved by going that this route, it didn't even matter. Like if something came up, I had the money available because I saved so much money anyway. So I hope that makes sense to you, right? And then the mortgage, I see a lot of money with the mortgage too, especially with rent prices today. And then my repair and maintenance, I really don't have no repair and maintenance like that, to be honest. But of course, something can come up at any time, so you want to budget. You still want to budget for the repair and maintenance. But like I said again, I'm not saying that one way is better than the other. I'm just showing you, what could potentially happen if you decide to go the route that I did. I'm showing you how I looked at things, really. This is what helped me make my decisions. So That's not to say everything's going to work out perfectly for you. Everybody's situation is different. But I'm just giving you my vision, how I looked at things. This is not financial advice. I'm not a financial advisor. Please don't take this as financial advice. I'm just showing you a scenario, 2 scenarios. So thank you guys for watching, and I'll see you in the next one.